Well, we have the market open here on a Monday, and let's take a look at what we are seeing happen on the corn market. On the futures first in Chicago, we have that March contract coming up, and it looks like we are on the plus side. We have March 1 3/4 higher at 389 3/4. Check that now, it's 2 higher. And we have the May 2 higher at 396. Currently resting on the high of the day. On the soybean market, well, they're getting a little enthusiasm here. Look at January. We're 8 1/4 higher at 936 1/2, almost on the high of the day. We have March up 8 at 946 1/4. Both of those just one tick away from their daily high. All right, how about the wheat? How's it doing? In Chicago, we have the March contract 2 1/4 higher. We're at 544 1/2. And in the July contract, we're 2 3/4 higher at 551 1/2. Kansas City wheat, we have the March contract now trading 3 higher at 465 1/4, and the July is 3 1/4 higher at 481. Minneapolis March wheat 3 3/4 higher. We're at 540 1/2 right now. And I want to bring in Dewey Strickler of Ag Watch Market Advisors in Franklin, Kentucky to sort it all out. All right, Dewey, I know it's kind of a thin trade today. It typically is when you get into the holidays here, but you have to be encouraged by the way things are firming up after the opening bell here.
Yeah, that's right. We had the funds. They were covering short positions last week, and looks like that they're covering some additional positions here today. They want to get that pretty well cleared out before year end. You got a little bit of scuttlebutt out that China has purchased about 126,000 tons of beans, and also looks like there's some purchases going to the Netherlands and a few other destinations as well. That's given the market a little bit of support here.
Yeah, we did see that announcement of the overnight sale. It's pretty much a carbon copy of what we had seen last week to China. It was 126,000 tons that were sold for the current marketing year here. Overall, you know, we did hear some talk last week about the fact that the U.S. dollar had weakened up in the recent week, although it did firm up, I believe, on Friday. We can take a look at what the dollar value is doing right now for maybe a sense of what it's doing here on a Monday. It looks like it is just kind of trying to hold its own. It's barely moving, maybe down a little bit. But what do you think overall in the bigger scheme of things here as far as the dollar influence on the grain trade, Dewey?
Well, you got a little bit of a downtrend in the dollar, short-term downtrend that is, and I think that has given support to these grains here. But I think, you know, all in all, it's still China's the big news story here that everyone is looking at. I will say this, my cycles are showing me that the beans could top either Friday or Monday, and we could see a pretty good sharp reaction lower. So there may be something developed. Like you said, you know, the volume usually gets a little bit light. Conditions get a little bit erratic when we get into these holidays, so we could be looking at some pretty wide swings here.
And generally, you have to be a little bit concerned when you get to the end of a marketing year like this. If any market has a particular trend heading into that spot, a lot of times it may be susceptible to that, as they say, window dressing, where there could be some profit taking to close out the books for that time period.
Yeah, don't ever underestimate what the funds can do when they start liquidating some positions. I'm showing they still have about 600 million bushels in corn. They're short about 380 and beans, and they're pretty well, I would say, flat now in wheat. Might even have just a little bit of a long position.
Okay. Well, I might follow up on that discussion when we come back after a break and see how they're doing when it comes to the livestock positioning. We'll talk about that with Dewey Strickler after this. All right, we're talking with Dewey Strickler of Ag Watch Market Advisors, and let's open up our livestock trade here on a Monday. It's going to be a short trading week, and we have the past cattle on feed report to digest this morning. Let's see how the trade is handling that information. On the live cattle board in Chicago at the present time, we are actually kind of narrowly mixed. We have December up 1 tick, 3 cents higher at 122.25. And you have February down a dime at 125.70. The far out deferred's about 30 to 38 cents lower. Now, if you look at our feeder cattle trade, it's a little bit weaker across the board. And you have January down 60 at 143.68, and you have March down 80 at 143.57. Going back to Dewey Strickler of AgWatch Market Advisors, a lot of folks wondered if we wouldn't have a weaker tone in the feeder cattle market after that high placements number that came out in the Cattle on Feed report Friday. So is this about what you expected there?
Well, I had looked for the cattle to be a little bit weaker than they were here. When you look at the placement numbers, they were in the upper end of the range, but as we were talking about in the break here, we have the funds have their biggest long position in the live cattle market since May here. So if they're continuing to buy the market, remember they're pretty well, they follow the trend. They go with what the trend is, and we do have an overall trend is higher in cattle. So, but, if they start to see this cattle come down and take out some support, look out below, because you got a pretty wide premium of cattle over the pork.
Well, speaking of pork, let's look at the lean hog trade and how it's opening up this morning. Let's go to the lean hog board in Chicago. Right now, February, 45 higher at 71.13, so we're only about 17 cents off of our earlier high of the day. We have that April contract now, 45 higher. We're at 77.95. In fact, we're about 20 to 55 higher all across the board on the lean hogs here this morning. And you mentioned earlier the talk that maybe some tariff reductions are in order out of China. They're talking about doing that on 800 and some products, I believe. So let's talk about this lean hog potential moving forward here. We have a hog and pig report coming out after the close today. We also have a cold storage report coming out. Could that damper the spirits of the lean hog trade, at least temporarily here?
Well, it could, depend upon how, that comes out. I would be looking at the cold storage report rather closely here, but I think the trade is pretty well just preoccupied, waiting to see about China coming in and buying pork, and that should give the market let's say, a psychological lift when that announcement of a purchase is made here.
Now, there had been some talk about the fact that ractopamine is still kind of in use in the U.S., and the Chinese do not like that. Is that something that they would rather see cleared off the ledger before they really dive in there with both feet?
Maybe that's what they're doing, trying to get that cleared.
All right. Well, Dewey, thanks for joining us here this morning as we kick off our short trading week. Dewey Strickler of AgWatch Market Advisors. He is based in the southern part of Kentucky, a little town called Franklin.
All right. As always, thank you, gentlemen, very much for the insight.